Hello, dividend growth stock investors. It's Colby, the DJI Crab, coming to you with a wild and rough day for Archer Daniels Midland, stock ticker ADM. They are having a rough year. They've delayed their Q3 earnings call due to some additional problems that they are having in their accounting department. This has been a terrible year for Archer Daniels Midland accounting department, and their stock just continues to plummet, take a beating. So what I want to do here with this video is talk to you about my mentality of how I feel about it when one of the stocks in my portfolio starts going down, and just some strategies and sort of the way I think through some of this stuff when this happens. I'm not a licensed professional financial advisor. You should always do your own due diligence when deciding to invest in or sell any particular stock or security. This is just my opinion. This one, Crab's opinion. Now, if you're new here, this channel focuses on 60 individual growth stocks that are split out into categories or tiers based off of your age. Archer Daniels Midland is in Tier 3, which is a group of stocks that I believe are best suited for dividend growth stock investors aged 42 to 53. So we're going to take a little bit of a look at what's going on with Archer Daniels Midland, but if you're looking for some really in-depth crunching the numbers type of advice, I would assume by now that the channel Dividend Talks has probably put out something by now crunching the numbers and really giving you some deep analysis on all of that. I'm not a paralysis by analysis person. I don't look at every last single number and metric and compare lots of different projections and things like that. I think that that's just a little bit too complicated, and it can really freeze a lot of investors in their tracks, especially investors that are fairly green and they're just trying to keep it simple. So this is going to be a little bit more of a mentality video as opposed to a numbers crunching video. I'm just going to forewarn you about that, but I hope you'll stick around to the end so you'll know exactly how I think through these sorts of things. So just really quick, taking a look at this Bloomberg article just so we can have an idea, high level, what's going on. ADM to amend results, cancels call, and more accounting errors. ADM said it will amend previous financial statements after uncovering accounting issues, prompting the crop trader to cancel its quarterly earnings call with analysts 14 hours before it was due to start. Ugh. So let's see. ADM said Monday evening it had identified additional errors in the way it reported sales between ag services and oil seeds, carbohydrate solutions, and nutrition business segments while testing new internal controls. After discussions with the Securities and Exchange Commission, ADM said it will amend financial statements for last year and the first and second quarters of 2024. It doesn't expect any material impact from the revisions. And then ADM shares fell as much as 12% in New York trading Tuesday. Very briefly, this stock dipped below $50. It has quickly recovered from that, but it is still quite a bit down. This closure follows news in January that ADM was investigating intersegment transactions. That revelation left the company in disarray, wiping more than $8 billion off its market value in just a single day, while also prompting the U.S. Department of Justice and SEC to probe its accounting practices. ADM removed its chief financial officer, Vikram Luthar. So now when that happened last spring, Archer Daniels Midland dropped from like high 60s, low 70s into the mid to low $50 a share. And in my primary brokerage, I started buying shares of Archer Daniels Midland until it recovered and got back around like $60 or so, and then I backed off. That's just what I did back in the spring before I had a YouTube channel and could talk to you all about that. Now, if they are saying that they are not expecting any material differences to occur as a result of these errors, then from a numbers standpoint, this might not actually impact a whole lot of anything. Now, if we take a look at this, if we kind of scroll down here in the article, look at a few other things here. It says ADM was expected to release its third quarter financial statement on Tuesday before the start of trading. In the surprise preliminary report late Monday, the company said earnings, excluding some items, slumped 33% from a year ago to $1.09 per share. That missed even the lowest of analyst estimates compiled by Bloomberg. It also slashed its full-year earnings outlook to a range of $4.50 to $5 per share, citing slower market demand, internal operational challenges, as well as legislative and regulatory policy uncertainties. The company previously projected a profit between 525 and 625. So that is fairly significant. I'm not going to lie to you about that. But let's just take a step back and breathe a little bit here and go back and review why Archer Daniels Midland made my final cut of the top 60 dividend growth stocks for the channel that I'm focusing in on. So if we go to Seeking Alpha, we're going to go to the dividends tab, like always, take a quick look at that dividend scorecard. Archer Daniels Midland currently yielding in the high 3% range right now. I'm going to look at this on the spreadsheet here in just a moment. Annual payout of $2 a share. Their payout ratio currently sits at 34%, which even if they readjust earnings and their profits are down and whatnot, this could spike all the way up to like 50%, and it's still a very comfortable payout ratio. Now, remember, Archer Daniels Midland did a double-digit dividend increase. It was like 11% earlier this year in the midst of all of that drama with that CFO that they let go. And now this is off. Archer Daniels Midland is actually has a 50-year dividend growth streak going. They are a dividend king. They have a 5-year dividend increase average of 7%. And like we looked at here, the payout ratio looks pretty comfortable. If we go back and look at the dividend growth, Archer Daniels Midland, we can just see here is very, very consistent. We can see a bit of a range, but you'll see 12%, 8%, couple of 2% increases, which were kind of a bummer, but that was coming off of, some rough times with COVID and just general trading and supply and demand, supply chain issues and all of that stuff. That's going to affect things like agriculture. But lots of good solid dividend increases in the mid to high single digits. Sometimes they come out with some real double digit bangers that can kind of offset some of the slower years that they may have. And typically, this stock is going to yield in the mid 2s to low 3s. Right now, it's yielding up in the high 3s. You can see here just as recently as 2022, Archer Daniels Midland sometimes was yielding below 2%. Now, that was when it was very overpriced in my estimation, but it certainly has a very nice long track record of consistently increasing those dividends, which is exactly what we are looking for. You see, in 2024, they went from 45 cents a share per quarter up to 50 cents. I'm not anticipating their Q4 dividend payment to be anything other than 50 cents. Now, next year, maybe they do a very small dividend increase as a result of all of this drama and book cooking that's been happening within the company. But I do believe their payout ratio is still comfortable. Now, we'll have to monitor this one really closely and see if it's something that we feel safe with buying. On Friday, you might recall that I added a small amount of Archer Daniels Midland to my new DJI Crab portfolio that I'm adding at minimum $100 a week to. And I did that even though I'm in the tier 2 category of age 31 to 41 because Archer Daniels Midland last week had topped 50% undervalued. I went ahead and jumped into this tier and started adding. And I get this number, remember, by comparing the 4-year average dividend yield, which as of today stands at 2.41%, to the current day yield, which right now is 3.88%. When this stock was under $50 earlier today, that hit above a 4% yield. Now I missed it. I wasn't paying attention at the time. I had some other stuff going on, unfortunately, and didn't have the opportunity to add to my position at under $50 a share when it was briefly there. I absolutely would have done that. But let me talk to you about my mentality here. So the DJI Crab model here is to put 50% of new money into ETFs. So we have automatic diversification and the other 50% into individual single stocks that I'm buying when they are way down. The reason I like to buy this stuff when it's way down, especially in a hot stock market like we have right now, is that eventually there's going to be a market correction. And a lot of these stocks that are trading way above their average in a stock market correction, like when everything starts dropping, some of those overpriced looking stocks have a lot farther to fall than some of these stocks like Archer Daniels Midland or Hormel or Genuine Parts Company that recently performed a bad quarter. These stocks are already down. So if there's an overall stock market crash or correction, some of these underpriced ones right now may not have as far to fall as others. At least that's my theory. It doesn't mean that I'm going to be right all the time. But what I want to do is acquire these stocks when they're taking a pounding because there is more opportunity for share price appreciation. And I'm acquiring the yield, the dividend payout at a better price. That's the name of the game. Now, when you're looking at very high quality companies like Archer Daniels Midland with a long track record of increasing their dividends, when they are reporting excellent quarters, quarter after quarter after quarter, and the profits are up and everything's looking great, and there's no bad news, and there's all kinds of excitement around it, guess what? The stock is not going to be undervalued at that point in time. In all likelihood, it's going to be overvalued. So my philosophy is similar to the idea of like a Warren Buffett, that famous saying of his where he says, be greedy when others are fearful and fearful when others are greedy. There's a lot of fear surrounding Archer Daniels Midland stock right now, and there's even been some insider selling going on recently. Now, all of that sounds bad, but that is the name of the game when you're a dividend growth stock investor. You gotta buy when other people are fearful and selling, because that's how you get a good deal. And sometimes, you gotta take a deep breath, cross your fingers and hope for the best and trust in the metrics and just know that at some point a great company is going to recover. Over the course of the last 50 years that ADM's been increasing their dividends year over year, do you not think that they've had a bad quarter or two? I'm sure that they have. There are going to be times when these stocks drop, and they drop when there's bad stuff floating around out there. Bad quarter of earnings, CFOs up to no good, cooking the books, insider selling, whatever. And that's when to swoop in and buy. And that can be scary. Now, I'm not telling you to go out and do anything. Again, do your own due diligence. If you want to look at some more in-depth number crunching, there's going to be some other channels on YouTube that are going to get into that. I think Dividend Talks, who I'm not affiliated with, I don't know the guy, but he does a great job of just breaking things down on a spreadsheet and showing you all kinds of different metrics and styles and whatnot to come up with fair price models. If you want to get into all of that stuff, that's going to be the place to go. But I just look at it as I'm with Archer Daniels Midland. I have an opportunity to acquire $2 a year forward income for every share I buy. And I would rather buy those shares in the low 50s than I would in the low 70s. That's just all that there is to it, you guys. Now, maybe that's too simple of an approach to take, but when I broke this channel down into just 60 high-quality dividend growth stocks, I was very selective on that. I wanted to make sure that I was starting this thing out with 60 stocks that I felt very confident in, that even if they had a bad quarter, or a bad couple of quarters, that they were still going to soldier on and continue increasing dividends because they were built to last. Now, what happens if Archer Daniels Midland opts to slash their dividend because of all of these problems? I'm going to sell Archer Daniels Midland. The reason for that is because there's a fairly long track record of companies that cut their dividends, and it doesn't work out very well, either for share price or for their dividends recovering. It's not a great batting average, to be quite honest with you. So the nice thing about it is I've got plenty of positions. So if this one particular one ends up being a dud and I've guessed wrong, then that's all right. I'll sell out of it. Maybe I'll have some tax loss harvesting that I can do. And I'm just going to move that money into another position that I feel better about. Not the end of the world if something like that happens, and that's what diversification in your portfolio is all about. So you don't have all of your eggs in just a few little baskets, whereas if one of those baskets catches on fire and now all your eggs are burning, that's not a good place to be in either. So I'm going to stay the course. I haven't made my stock purchases for the week just yet, but as things stand right now, I'm going to continue to add a little bit of money into Archer Daniels Midland while it is way down, and then when the stock price recovers, then I'm going to hold off and just let the dividends continue to reinvest. And if they stay down here in the low 50s, or if it gets worse, their 4-year average yield is going to continue to creep up, and maybe it won't be as attractive as time goes on. But I'm going to stay the course with ADM. I believe the company can get things righted. What do you all think? Are you buying ADM right now, or are you staying away? Let me know what your thoughts are below. Links in the description to each of the 4 tiers where I break down the stocks in those categories and why they made the list, including good old Archer Daniels Midland there in tier 3. See you next time, everybody. Just take a breath.